Hi traders, and welcome to the Technical Analysis Market Wrap on Friday the 1st of October. So the start of the new month is going to see some pretty good trends starting, I think. We've seen some good breakouts this week on some of the majors and some of the key indices. So we'll jump straight into the charts and we'll see what we can find for today's trading and early into next week. So I'll start out here with the Aussie USD. We can see that we've had a good breakdown from that level at the 20 moving average. We can see we had a week of consolidation where the 20 moving average on the daily chart was effectively touched, 5 times really, and you can see that. And then we had that bit of a sell-off yesterday. You can see that it came down and had a pretty good run. It got down to around that sort of the 71.80 level, which is a reasonable amount of support. The 70, the 71.80, 71.20, all the 20 and 80 levels are going to hold up pretty well. So it found that little bit of support there, and it's dragged its way up a little bit through tonight's or last night's trading. If you go to a smaller time frame though, you can see that we've got the lightning bolt effect, no question about that. What I loved about this trade was it had the double top at the 200 on the 4 hour. You can see there, there's a neckline. It broke it down and effectively went the full distance. So realistic, if you were trading the smaller patterns on some of these, you would have done pretty well. As you can see now, it's bounced back straight up to the neckline of that double bottom, the double top again. Here's the resistance zone. So you can see here the 20 moving average. You've also got the support here from these bottoms, and the tops over here form that neckline. So it's had a pretty reasonable level of support, and you can see the stochastic is already starting to turn around. So that, of course, has been helped by this big rejection candle that has pulled up from the 50 and the 20 moving average. So what we're looking for here is a bit of a reversal, really. I'm not convinced it's going long anytime soon. The longer term trend is still certainly down. So we're probably looking for shorts back down to that one, or probably the 71 flat, 71.20 level. A bit of a scalp still at the moment, so we've still got that 60 to 80 pip range that we're looking for. We want to take advantage of that. So look for a really small time frame change of trend here. You can see that we're at that zone now, that if it's going to reverse, this is the place. We'll go to a 15-minute chart. You're probably looking for a 15-minute turnaround around this level. So you want to see a lower high, lower low sequence on a 15-minute chart. And that'll pretty much get you in on that one. So I think the setup's on the 4 hour there at the roll reversal zone. And then we'll see if we can get it down to that 71.20. But this has been really, really good trading. Hopefully you're able to catch some of this because we've had some fantastic moves on it. All right, we'll move over to the US dollar CAD now. This one has been probably the poorer performer of all of the big ones, really. Like the rest of them have really given us some great moves. This has been okay. Like it's certainly moved up, but I don't think it's been the standout. You can see that it has found support at that level several times now. You can see it's back there again. The dollar index strength has been really, really strong. So US dollar strength has been strong. So yeah, this one here is probably being dragged down by there's probably a couple of factors. Oil could be one of them for the CAD as well, of course. But yeah, realistically, this didn't perform anywhere near as good as the others. So it's holding its own still. It's still certainly in an uptrend. There's no question about that. But you've really got to go to the smaller time frames to isolate opportunities. And even then, they haven't been that prevalent. So realistically, it's probably one of those ones that you would just watch and see. This is not really going to interest me now until we get a close, above this, certainly above this level here. But pretty much it needs to get around the 128 sort of 80 to 129 area. When it gets up there, we're going to get interested in it again. Until it does that, I think it could go sideways a little bit. So we'll just keep an eye on this one. The longer term target's still definitely 130. But if it does break down past the 200 moving average and all of this support here, we'll be looking at going lower. But I think still strength is in the US dollar, so I'm not so sure it's going to be probably going down. I'd be looking for little mini reversals around this level to trade it up maybe to the 128, 129 area, which wouldn't be a bad trade. So you've got to go to the 1 hour really and just look for the opportunity. So effectively go to look for here's the support level that we're looking at. If we get a series of higher highs and higher lows and it gets past that 200, so around that 127 sort of 50 area, then you can start longing it to the 128, 90, 129 area. That's the area that is more than likely going to without a lot of trouble in front of it. All right, we'll move over to the US dollar yen now. The US dollar yen has been a big standout. It sold off the resistance as we would fully expect. It did a great job. Look, it busted out of this zone here. It formed the double bottom that we saw, that we isolated. It's definitely played the game, broken that resistance, and really, really marched on to 112. We know 112 is a very, very strong level, right? So there's no surprises that it's reversed from here. No surprises at all. In fact, it should have been a trade if you were around the time when it did it. This is what it looks like on a weekly. So just to give you a bit of an idea as how strong that level is. The 112 is effectively, let's draw it right there. That's the 112 level there, okay? So you can see that it touched it and then it was there pretty much 12 hours ago. You can see how strong that level is when you go to a weekly. You can see the double top there, all of the touches here. You can see that it was resistance there. And it was resistance there again. So no surprises that it's going to pull up at the 112. It's had a really big move out of that consolidation zone, which is great. Hopefully you're able to trade that because I think it was a pretty easy trade. But also probably just as easy was a trade off the 112. I think it was always going to reverse at that level. How far it goes now is, I guess it's anyone's guess really. I probably wouldn't like it to go all the way back to the consolidation zone because that's probably a little bit too far and it's going to lose a little bit more momentum. But the next stop for this one, if it does get past the 112, is definitely 114. That's the one where 114 will be a good aim for it because it's very strong resistance at 114, probably even stronger than the 112. But obviously, it's got a little bit of work to do to get past the 112 first, right? So we need to let the market action play out. What we need to do, if you want to trade this, is that's the big 4-hour chart that moved up. You can see you've got barely any pullbacks at all. If we see a reversal on a 4-hour, so a series of higher highs and higher lows from around this level here, then it might make another advance on the 112, and if it breaks the 112, then we'll start targeting the 114 with some short and sharp scalping opportunities. Just look for the swings off that level. So good trading, but I think that sell-off was pretty obvious. So I think if you were trading the 4-hour, you would have seen all of that conjecture in that area, and I think you would have been. I would have taken my profits at the 20 moving average on the 4-hour, though I wouldn't have probably expected it to go much further. So that would have been my target. Where from here maybe it might find support at 111 again, but realistically this is probably right there is the level that it may get to, which is around that 110.80. At an extreme it might get there. That would be about nearly a 50% fib pullback as well of that big move, so it wouldn't be a bad place to reload. So maybe start looking for longs around that level there, but certainly don't just jump in. Go to the smaller time frames and make sure the trend is reversing before you actually take it, because it could fall quite sharply without a pullback, so you don't want to get caught in that sort of thing. All right, we'll move on over now to the US dollar index. The star of the show, really. This has been the big one. We've seen a big move out of this. This is a weekly chart as well, so we'll start out with the biggest time frame. You can see that it was hugging the 20 moving average there on the way up. So the last few weeks have been very strong. It bounced off that level. We're about to get a 2050 cross on the weekly. Okay, that's a very big deal. You can see the last time it happened was way back up here at around that 97.50. So a cross down here is a very significant move. You can see the double bottom here is effectively trying to play out. And if it does play out, it's going to go straight back into this level here, which is around that 97. So if that pattern plays out, it's a really big pattern, which is really good. It is at a critical level of resistance, though. There's no worries about that. You've got the 200 moving average, which is that little green line. The weekly's so long that we haven't even got enough data to make a proper 200 moving average, but that is there. Make no mistake. This green horizontal line is at around that 94.50 level. That's the level that it touched. You can see that it was resistance right through here. You can see months of resistance right there. And it was support, resistance again. So no surprises that it's going to find trouble to get past this zone. But there is probably enough momentum to think that it can get through. And if it does get through, the 95 to 96 levels are looking very likely for this one. Dollar strength is set to potentially continue with all the signs that we're getting. MACD, it's got plenty of MACD power there, as you can see. And we're about to get that all important 2050 cross. Okay, so that bodes very well for the euro short, of course. But US dollar strength is absolutely kicking. We can see that we've got the lightning bolt on a weekly, extraordinary time frame to have that happen off a really good zone. You can see that we've had the lightning bolts all the way up on the daily as well. Really, hopefully you're able to get hold of this. I know we've been talking about it for ages, about the break, and it finally happened. So hopefully you're able to get a good portion of that. You can see it touched the resistance zone basically to the point and then came and sold off it. How far it goes back, it's hard to predict, but I think, even a pullback down to 93, sort of 80 here, which is that resistance from this point here, that wouldn't be the end of the world, and it's probably a reload zone. It will give the moving averages a chance to reset themselves and catch up, so it certainly wouldn't be a bad thing, but that's what we'd be probably looking for. So, look, we'll move straight over to the Euro USD, because that's the one we obviously trade. It broke the 116.80 level really strongly, as you can see. It was dying to break it. We all knew this, and hopefully you're able to capitalize on that, because we've been talking about it for ages. It went down sort of Yeah, where did it get to? It got really down to about that 115.60 and then start to pick up. And no surprises that it is finding a bit of, resistance to go down from this point. I mean, or support, we should say. It's finding it hard because of the resistance on the dollar index, right? So without the dollar index going past 112, this is not going to go any lower. It's just as simple as that. So realistically, we need the dollar index to reset a little bit, and then we might be able to see the advance down to that 114.50 area, which I think this is probably where it really wants to go. We'll go to a weekly, and you have to go out a fair way to actually see that. And there it is there, the 114.44. I've got that line marked. 114.50 is the same thing when you're talking about a weekly, of course. That's the overall target for the euro. You can see we're definitely in a downtrend. There's a double top, which is the opposite of the dollar index, of course. Neckline is well and truly broken now. The 20 moving average did its job. It was a great sell point from there on the weekly. It's been a bonanza of trading on the euro, so hopefully you're able to get it because it's been really solid from a technical standpoint. But plenty of MACD power, of course. Like I said, I don't expect it to sell off completely from here. I think it will probably retrace, find a little bit of common ground with where the dollar index is going to find support, and then it may relaunch again. If the dollar index launches past the 112, this should push down to the 114.50. So that's the target. You need to set a bit of an alert for these ones. You have to look for a pullback maybe to that 116.80 again. If it pulls back up to there, look for those reversals on the smaller time frames, a change of trend, and we'll be off and running. So good trading on that one. All right, we'll go to the ASX 200. We'll do a couple of the indices now to finish up. You can see here that this one had a cracking go in yesterday's trade to try and break the 20 moving average on the daily. I'm not sure what all that power was about, but it certainly got sorted out in the US session, and you can see it's a very big bearish candle off the 20 moving average. Back to 72, which makes me a little bit sad, because there were opportunities up there that we missed. But we've got plenty on the way down, so it doesn't matter. We've got plenty of good opportunities and good trading on the way down, but there was a 20 touch that you could have easily traded on this one. Look, the 72 is pretty strong. The 7200 is pretty strong, but if this fails to hold, the next level is 6,900. So we've got a little bit of conjecture here around that 7,000. 7,000 will be an important zone for it. But if we get a break below this 200 moving average and this new low here, I think the 6,900 is where it really wants to go. And I think that's where it's going to find its real support, because you can see that we've got resistance and support. It's a very strong roll reversal here. So it would not surprise me at all to see it break down this level and go from there. To go along from here, you're going to see a change of trend. You have to see a change of trend on at least a 4 hour now. I wouldn't believe anything but a 4 hour chart for a change of trend to go up. If we get a sequence of higher highs and higher lows on a 4 hour, then you can start trading it back again into the 7,400 area, 7,450. But the short is definitely the way to approach this one with a little bit more confidence, because I think the power of the momentum on the bigger time frames is definitely still on the lower end. All right, we'll jump into the US 500. This has finished the session, or trying to finish the session, really weak. The cross of the 20 and the 50 is going to happen now. There's nothing's going to stop this from happening now, short of an absolute miracle. And that has not crossed since 2800. Okay, so it's been a very long time between crosses. We all know what it's done since, and as you can see, it is trying to break down again. It's all but crossed. It's trying to make a new low. You can see here 4300 is, it's all but broken. The very first zone it's going to get to is the 4240. That's pretty much that's almost a given. Once it breaks this level, it's going to trade down to here. So keep an eye on the smaller time frames. Look for pullbacks to the 20 moving average on maybe a 1 hour. That'll get you involved in that short. But longer term, I think if we have a serious pullback, and I think one that could definitely, if the weakness really sets in, I think we could get down to this 3950 area to 4,000. That's probably where it would really, that would make me happy, because I think that's a very good roll reversal zone. I think we could pick up strength from there and then start looking for longs from that point onwards. First point of call, of course, is this little mini roll reversal here, the 4240 area. If it gets to there, it's probably going to find some sort of a pause unless it really breaks through. But a 2050 moving average is cross is a big deal, make no mistake. And now that it is all but crossed, I would think that the weakness will more than likely continue, and we'll be looking for shorting opportunities down to the 4240 and basically the 3950. The only thing that would change my mind on this one now is a 4-hour change of trend to the upside. So if we get a series of higher highs and higher lows on a 4-hour, then you can start trading it back maybe to the moving averages again and start looking to those high 4400s. But it's got a lot of work to do before it does that. And the 4-hour time frame is the only one that I would believe in this instance. Okay, so because the power is on the way down, you want to be going to the bigger time frames to confirm the change of trend. All right, so I hope everyone's had a great week's trading. I think there's been some fantastic opportunities. All of the break levels that we've been talking about finally did the job for us. So hopefully you're able to capitalize on those. But I think the trends are only just beginning. So I think we're going to get some really, really good movement in the next few weeks to finish off the year nice and strong, hopefully with some really good trending action. And we've got some key breaks that are already happening. So set your alerts and hopefully you can take part today and early into next week. Have a great weekend, everyone.